Welcome to the Investment Dive, brought to you by Corporate Capital Market Limited. Joining you today are your hosts, Amanda and Adrian.
Welcome to this deep dive. Navigating the financial world today, it means looking for smart ways to grow your money, but ways that also feel, well, secure.
Absolutely. And many people, probably including you listening, are pretty familiar with fixed deposits. They're often seen as that stable go-to option.
They really are predictable.
Yeah.
But sources we've been looking at for today suggest there might be a powerful alternative out there, something beyond FDs.
That's right. We're going to explore the world of debentures today. We've got some great material, including insights from Corporate Capital Market Limited.
Okay.
And our goal really is to unpack why debentures could actually be a pretty smart addition to your investment strategy.
Excellent. Let's get into it. But first, just quickly, for anyone maybe less familiar, what exactly is a debenture in simple terms?
Good starting point. So think of a debenture as basically an IOU from a company.
An IOU, okay.
Yeah, when you buy one, you're essentially lending money directly to that corporation for a specific time. And in return, they promise to pay you regular interest, as are often called coupons, and then, crucially, pay back your original investment, the principal, when the debenture matures.
Got it. And unlike, say, a mortgage on a house, these aren't usually backed by specific assets.
Generally, no. It's more based on the company's overall financial health and its promise to pay, its creditworthiness.
Okay, clear. So lending directly to a company. Now, let's dive into what these sources really hammered home. First point, the potential for, well, higher interest rates compared to FDs.
Yes, this came up repeatedly in the material. It's a key attraction. When you're looking at fixed income options, the return is naturally a big factor.
Of course.
And the sources consistently indicate that debentures, especially from well-regarded, highly rated companies, often offer, significantly better yields than typical fixed deposits.
And what's the thinking behind that? Why the difference?
Well, FD rates are usually linked to bank base rates, and they can sometimes be a bit slow to react to market changes.
Mm-hmm.
Corporations issuing debentures, though, they're out there in the capital markets actively trying to attract your investment dollars.
Uh-huh.
So, as one source pointed out, they often structure these debenture offers to be more competitive. And a primary way to do that, offer a higher interest rate than you might easily find with an FD.
So they need to make it appealing to get the funding they need.
Exactly. It's about standing out.
Which means for you, the listener, this isn't just numbers on a page. The sources suggest it's a real chance to potentially boost your fixed income return. Make that part of your money work a bit harder.
Precisely. It's about finding that extra yield potential within that fixed income space.
Okay, so higher potential returns is one big pick. Now, moving on. Another core idea in smart investing that the sources say debentures really help with is diversification.
Yes, diversification. We all know the saying, don't put all your eggs in one basket.
Right, the classic.
But what's interesting here, based on the sources, is how debentures let you do that in a way FDs typically can't. Well, with fixed deposits, your money is largely concentrated in banks and maybe some finance companies. So your risk is tied quite heavily to that one sector, the financial sector.
Yeah, makes sense.
But the sources argue strongly that debentures let you break out of that. They open up a much broader playing field for investment.
Across different industries.
Exactly. One source specifically listed things like manufacturing, services, infrastructure, even large established international conglomerates. You get access to a wider slice of the economy.
And there's a specific company example mentioned, wasn't there?
Yes, Haley's was highlighted in another source. And it's a great example because, as the material pointed out, Haley's itself is incredibly diverse. It operates across plantations, manufacturing, logistics, leisure, a whole range of things mentioned in their reports. So investing in their debentures effectively gives you exposure to all those different economic activities through just one investment.
That's a fascinating point. So it's not just investing in another company, it's investing in a company that itself represents diversification away from just banking.
Precisely. And another source really drove home why that broader exposure matters so much. It helps mitigate risk.
Right, the balancing act.
Yeah. If one sector, maybe manufacturing, hits a rough patch, your entire investment isn't tied to its fate. Your exposure through that debenture to other areas like services or logistics, which might be doing fine or even growing, can help cushion the blow.
So it builds a more resilient portfolio overall, something that's not entirely dependent on just one part of the economy doing well.
Exactly. It can potentially handle different economic conditions better. It helps protect your capital and maybe even enhance returns over time because you're not limited to how just one sector is performing.
Creates a more robust foundation by spreading that sector risk.
That's the idea.
Okay, so let's quickly recap what the sources have highlighted so far. We've got two really compelling points for considering debentures. First, that potential for higher interest rates to boost fixed income.
Compared to many FDs, yes.
And second, this excellent diversification potential, spreading your investment across various sectors and companies for a, well, more balanced portfolio.
Two really strong arguments based on the material we reviewed. But the sources didn't just stop there.
No, they didn't. They also touched on another really critical factor for any investment, liquidity.
Ah, yes. How easily can you get your money back if you need it?
Exactly. How accessible are your funds? It's something that sources brought up, and it definitely gives you pause for thought, doesn't it? When you weigh up different options, how quickly could you actually turn that investment back into cash? It's the key question to keep in mind.
A very practical consideration for every investor, definitely.
Well, thank you for joining us for this deep dive today. We really hope exploring these sources has offered some valuable insights into why debentures might just deserve your attention as you plan your investment strategy.
We drew on some solid material for this, including that detailed information from Corporate Capital Market Limited to really understand the case for debentures.
So keep exploring, keep learning, and definitely keep thinking about those key factors: yield, diversification, and as we just touched on, that crucial question of liquidity as you make your